Hello friends, today we are going to discuss about fire claim of transporters. This is a very unique industry. Transporters, they carry goods all over India from the owner's place to the godown, then the delivery place, and maybe consignor to consignee. Different things they do across the country to move goods. And lot of times, what happens? Fire can take place. Where? In the godown of the transporter, he has received the goods, there can be fire. Well, in transit also, the truck has started left the place and it is going to the destination. In between there can be an accident, there can be a fire. Yes, such a loss can take place. Well, thirdly, the goods have reached the destination. Now it is in the godown of the transporter. The fire can take place there also. So there are a lot of possibilities. Now I am chartered accountant surveyor for last 35 years. I want to use my knowledge for the benefit of all the transporters across the country. Let everybody get benefit out of my knowledge. Otherwise, what is the use of my knowledge if I keep it within my fist? No, I want to open it for everybody. Let all the insurance surveyors, all the insurance companies, all the brokers, all the transporters, to be very specific, let them get benefit out of my knowledge. Now, this knowledge, I am using it for a particular purpose. That let my country be prosperous, let all the transporters be prosperous, let there be a proper policy, and let them safeguard against their risk of fire, etc. Now, let us start with the first one. Now, the godown owner, that is the transporter, he has kept the goods or he has received the goods from the consignor. Sir, please take it, and he has brought it to his godown. Fine. What if the godown is there and at that place some fire take place? Okay, in that case, it is the duty of the transporter to take policy of stock, of all types of stock that he is storing in the godown. So that he is covered under the fire policy. The goods may belong to different parties. 1, 2, 3, 4, 10, 100, 200 parties the goods may belong to. Now he has to dispatch all over India, maybe particular state, particular city, or maybe different cities. He should take coverage for all the godowns that the transport is having, maybe in Delhi, maybe in Kolkata, maybe in Bombay, different places. He should take policy for godowns, so that whenever there is a fire or flood loss, he should be covered for that particular peril. Now he can take specifically with address, this is my godown, this is my address, fine. That is the one purpose. Secondly, now in transit, he has handed over the goods to a truck which may belong to him, which may belong to somebody else. He has taken it from the market. Now he gives the goods, and in transit the fire takes place. This year in April and May, the heat was very high, maybe as high as 45-degree temperature, maybe 47 ambient temperature was very high. The trucks were catching fire across the country. So he should take coverage, his own goods lying with in the truck that he has dispatched to his destination. Now fire took place, he should take coverage for that. That is in transit. So he can take a policy for all the transits across the country by the transporter. That is called he can take a complete turnover policy. For example, he can take a policy of say 30 crores. For my 2.5 crores is shipping every month. So 2.5 into 12 is 30 crores. He can take a policy for complete transit, all the goods across the country, wherever it is going from his godown to different places. So he can take one single policy, that is called open policy, open marine cargo policy from the insurance company, and it doesn't cost much. For 30 crores the premium would be say maybe lakh or 2 lakh. That is all. For that small amount he is getting coverage of 30 crores, and wherever the amount is exhausted, he can again increase the sum insured from 30 crore to 60 crore, 90 crore, and like that. So he can keep on increasing whenever the amount is exhausted. Okay. Now that way, what he is doing, he is taking the coverage in transit, all the marine cargo transit coverage he is taking, maybe due to fire, due to flood, due to accident, any type of loss, because the losses can be of any type. While the losses in the godown will be of different, maybe due to fire or flood. There is no accident in the godown, so but accident can be in transit. Now the third thing comes, okay, the stock has reached the godown, destination godown. So at the destination, he keeps the goods in his own godown for delivery to different places. Now, if he covers his particular godown, that okay, I've got 10 godowns across the country, one of the godown is, for example, at Kolkata also, or at Mumbai also. Okay, let me cover for that also. What if a fire takes place after reaching the destination? Yes. Now the transit has not yet, transit has ended. Now he has to cover his godown for their purpose. The goods are lying in my godown, it should be covered. Now these are the simpler facts that he should take coverage for the godown and coverage for the transit that he is responsible for. Now see the complication starts. How? He has not taken any policy for the godowns. Now what happens? The original owner of the good, that is the consignor, he has taken a policy that all my goods that will be handed over to the transporter. He takes a policy. Well, in such a case, the original owner of goods can lodge a claim if he has taken a policy. Normally, big companies, they all take a policy. Smaller companies do not. So smaller companies are uninsured and the big companies are insured. So he can say, my goods are lying in the godown, it is burnt, give me the insurance company, give me the claim. The transporter need not to pay. In transit, loss has taken place, well, he can claim it from the insurance company for loss in transit due to accident, due to fire, flood, anything. Now, maybe even due to hijacking also. Yeah, that is also covered in the policy. Now, the goods that reach the godown, there is a fire, so the original owner of goods, there is a consignor, can take a claim from his insurance company. Now, this is the second person come. Now, the transporter is holding the stock in trust. He is not the owner of the goods. The owner of goods is somebody else, that is the consignor. Now, consignor can be of two types. Now we have seen one has taken a policy, one has not taken a policy. So go down, the transporter will be responsible for stock for which there is no policy. Because he will say that, okay, that the goods are with me at my risk, he has not taken a policy, I am responsible for him to indemnify him. So he will lodge a claim under his own policy. If there is a consignor who has taken a policy, he can say, look sir, you please take a claim under your policy, I am not giving you any claim. I am not taking any policy for your purpose, I have taken the policy for other people, those who are not insured, those who have not taken any policy. Now for the transit, he can say that, same thing he can say for the godown lying in the factory, the stock lying in the godown also, that this is insured by him, this is not insured. Not insured, I am responsible. What if he has not taken a policy? In that case, he is completely uninsured. He has not taken a policy, and the other small parties have also not taken policy. It is between them. Insurance company doesn't come in the scene. Now, these are the some. Now, see the further complications. How does it further? Now, in some cases, what happens? The transporter, for example, fabric, motor parts, different type the transporter gives them storage facility. He takes the goods, takes it to different destination and stores them there. For example, he is taken it to Andhra Pradesh, maybe to Hyderabad. And Hyderabad, the party says, look, I don't need the goods. You please keep it with you. I will take it as and when need arises. So he is storing it. He is giving them. So to improve your business, sometimes you have to give transportation facility and storage facility also. Now he is given a storage facility. Now what if he has kept the stock for 6 months or 1 year and he has not taken your delivery? In that case, the transporter will be responsible for the safe custody of the goods, and he can take a policy at the godown and he can say that, okay, these goods are lying with me under my responsibility as goods held in trust, and I am responsible for paying the claim if there is a fire in my godown. So similarly, he has to prove that, okay, this belongs to so and so person, I was to deliver to so and so person, and the goods are lying with me. So he has to take the purchase bill and all that, and they say that, okay, this is the cost of goods. Now let us take the further. Now, whenever the stock is lying with the transporter, they are not his own stock, these are all held in trust. Who will tell how much value? So it will be all by the invoice of the consignor. That will say so much is the invoice. Now, for example, if invoice value is what? Say, for example, 10 lakhs or 1 crore or whatever it is. Now, that value he has to pay to the other. He will say, look sir, no, I cannot sell the goods, these are all burnt. You give me GST also. In that case, the transporter has to make sure that the goods are insured along with GST value also. For example, at an average 18%. So 1 crore is the value of the goods. That means he should make sure that 18% is also added to the value. So 1 crore 18 lakh he should be take the policy for, so that he can pay him, and the owner of goods will give a proof. In GST 3B, I have surrendered your declaration that yes, I have surrendered it, and all the necessary paper. He will get the invoice, consignor's copy of GR, and this surrender proof also of GST. So then he can be paid the claim cost of the goods along with GST. Now look, this is the one part. Let us examine another part. the transporter has got different type of goods, maybe cloth, maybe garments, maybe textile goods, maybe the motor parts, maybe chemicals, which are sometimes very dangerous. He has brought chemicals that has caught fire, which is very high. So he can decline the proposal form while taking a policy from the SEUCURE. Look, sir, it is for general goods as required by my transportation business. I cannot specify what type of goods. It can be of any type. So insurance company has to respect that. Okay, he can carry any type of goods, and that goods will be covered, which may be higher payable, may not be payable. Like all type of goods. So in one case, what happened? There was a fire at the destination in the godown of the transporter. Now, when the fire took place, there was a big blast, and lot of people died. He said, okay, fine. So all the godown total goods were completely burned and all that, and he has to pay the claim. So insurance company honored the claim. Okay, fine, you will get the claim, and you can pay to the all the consignors and all that. Now, sometimes what happens, all the paper that he has at his disposal at the godown completely burned, computer is burned, papers are burned. Now how to find out? In such cases, consignor's copy of the GR, that will be very important. His invoice, his consignor's copy. The transporter may say it is burned, but the consignee will also be GR copy. So these things will come to help. In transit, support truck papers are burned. So again, the other people, the transporter may have at his godown, the DSI dispatch and other part. Likewise, different type of things have to be taken care of. The transporter can take a policy, surveyor can do a survey, insurance company can do a proper insurance, and brokers can help. So the purpose of this video is to educate everybody about the risk involved and what type of policy they can take and what type of risk they run from the beginning till the end. So if they properly insurance companies, will be surprised, are very happy to pay a claim. They don't want to deny a claim. They know that if they deny a claim, it will go to the court, High Court, Supreme Court. Finally, they will pay with interest and cost, and so there may be so much of bad debt. They lose the business. So they are happy to pay a claim to a person who has taken a policy. So always buy a policy. Don't worry. Surveyors are happy to recommend a claim. Brokers are happy to give a proper policy. Insurance companies are happy to honor the claim. That is all perfectly okay. So take a policy, and this is good for the country that all the transporters are properly insured. It will be fantastic for the country, and it is win-win for everybody. Thank you very much for listening to this short video on transporters. Thank you very much. This is Ram Gopal Verma. And by the way, I've written this book. In this book also there are case studies related to transports and etc. that can be of benefit to everybody. That is the purpose of writing this book for the whole country. Thank you very much. Ram Gopal Verma.